Good evening, everyone. Welcome to closing comments here for March 19th. Let's jump right into our charts and see what happened in the markets today. First on the board, we got our June live cattle. We did see some weakness starting to creep back into this cattle market today. We definitely saw those feeders take it the hardest, but we still did see some downside here in this live cattle market as well. This June live contract opening up today and seeing some weakness early off that opening range, immediately pushing lower. This market did spend the bulk of the day kind of balancing out here on either side of 232. There was a late day push down to the low at 231 before settling back at 31.75 into the close. At the moment, though, this is looking like we're getting a nice rejection off this prior supply zone, seeing that resistance and those sellers start to step in on all the right places. Expect to see some of today's weakness spill over into tomorrow's session. Bears want to make a run lower here to finish this week. Back down near those lows and keep that downside rolling here into next week. The downtrend still remains intact. At the moment, looking like we're getting a near-term high here right around 234. If we get continued offers down here below today's low at 231, look for this market to start flushing back down here into the mid-20s and keep this downtrend intact. If we get some offers coming in below today's low, look for that volume to really start picking up. After this light volume relief rally here, we should see those sellers start to get aggressive here tomorrow and finish this week with authority. So look for those bears to try and drive this thing back down into the 220s and keep this downside rolling here in this live cattle market. I encourage everyone to continue to be defensive here, stay cash heavy in this cattle market, as we should see some more downside here in the days to come. Next up, April feeders on the board. Feeder market was definitely where the more of the weakness was here across this cattle market. That is. Prices seeing a gap lower here today. Prices opening up right there around 351 and pressing lower the majority of the day. We did see a nice drive all the way down to 347, kind of finishing back up off of those lows, but still losing some ground here, losing about $6 on the day here for this April contract. Nice drive lower here, nice downtrend day here for this feeder market. We are starting to see some more volume spill over here into May. We are taking our time rolling over here this week, so it might take some time for those feeders to really spill into this May contract, but we are seeing volume picking up over here, so we'll be ready to roll here as we move into next week. These either contract, though, continue to see some downside, nice clean break below those prior day lows, and which really opened up that selling activity today. At the moment, we're seeing continued lower lows here. Those bears finding some resistance here up at those major averages. Good rejection here of this relief rally we saw here to start this week. If those bears are able to keep on driving this market below today's low at 347, we should see it start heading back down here towards 340 and keeping this downtrend rolling. Look for these feeder prices to keep on slipping. Both live and feeder markets should see some weakness here into Friday's session. Bears are probably going to try and close this thing back down near those lows and keep this downside pressure going into next week. Look for more weakness here to hit this cattle market as we go into the weekend. Today we did see our May corn futures continue to rally. Prices rallied up here towards the 465 top end of that range here yesterday, and a really nice strong drive here today, rallying and finishing up there on the highs at 470. This opens the door to some upside. Look for the bulls to continue driving this market out of here as long as we remain trading above 465. They got the green light to start heading back up there towards $5. We should see this corn market try and play catch up here to the other grains as they have seen some impressive strength. Corn should start to follow suit here and keep on driving up towards $5 as long as we can maintain 465. This continues to be the key level to watch. Weekly finish up above here will confirm a new uptrend, and we should see higher corn prices here into next week as long as we get a nice strong finish here during Friday's session. Next up, crude oil markets continuing to chop up. At the moment, we've continued to see this market chopping up in about an $8 range here between 92 and $100. All week long so far, we've just seen good back and forth as this crude market is digesting this recent volatility. That big spike up to 120 may be the peak here, barring any sort of escalation. So expect some more wide ranges and choppy action here while this crude market continues to get used to these new levels and digest this volatility. Equity markets did see a little bit of a downside continuation here today. Each of our indexes all seeing some downside early before recovering into the close. We are still seeing some considerable weakness here across the stock market. There are a few spots that you can still find some strength, but at the moment, this market is one that we want to kind of be defensive and stay cash heavy. Still not a whole lot of good signs out here. We expect to see this downside continue into tomorrow's session. The Nasdaq continues to defend these range lows, so as long as the Nasdaq is able to hold that, we could kind of stay choppy. If those lows do give out here tomorrow and we get a weak finish down here below 24,000, look forward to that to open up some more selling pressure and bring some more downside. So at best, we could expect some more chop here in the current ranges we've been in. But we continue to be defensive. If we start to see some of these prior week lows give way, look for that selling pressure really start step back in and get more into more of a corrective environment. So there will be better days to put money to work at the moment. We encourage everyone to still stay defensive here, and there will be better opportunities to come. This market's got a lot of work to do here before we can really commit to any upside. So stay defensive, stay cash heavy. There will be better days to come. That's all we got here for this week. Appreciate you all tuning in for closing comments this week. We are off tomorrow, with tomorrow being the last session for the week. We'll catch you this weekend for our Week 12 Market Watch. Thank you and have a good night.